Welcome everybody to Mastering QuickBooks Desktop Job Costing and Construction Accounting Part 1. This will be a two-part series. And thank you very much to T-Sheets for sponsoring this episode or this session. My name is Hector Garcia. I'm an accountant, QuickBooks consultant. There's a link to my YouTube channel and a link to my email. There's tons of resources there, and you can email me any questions about QuickBooks. If I can answer them rather quickly, you can count on me for that. T-Sheets is a time management, scheduling, GPS, and mobile solution application that was actually acquired by QuickBooks. It is still considered a third-party app, so it's an app that can connect to QuickBooks and other systems. We're going to allow T-Sheets to do a quick demonstration or a quick introduction to their program for accountants, which is free. And if you want to check them out, tsheets.com. T-Sheets is highly relevant to job costing because a major piece of job costing, it's time tracking. So in this webinar, we will have a discussion about time tracking and how that pertains to job costing. And T-Sheets is a great app to use to track time outside of QuickBooks and then transfer it over to QuickBooks to then essentially do the job costing afterwards. So let's do a quick review of job costing across all versions of QuickBooks. And this is so important because if you're watching this webinar and then try to replicate some of these things afterwards, it's important to know what some versions of QuickBooks do and some versions of QuickBooks don't. As of the date of this webinar, I still do not recommend QuickBooks Online for job costing, specifically because you cannot do payroll job costing. Also because progress invoicing, which we're going to cover today, it's very limited, and there isn't a budget versus actual report, an estimate versus actual report, which is the most important thing that we need to have in order to have some sort of work in progress report. So when we go into the world of QuickBooks Desktop, and we're talking about QuickBooks Pro now, QuickBooks Pro has full progress invoice report, has full payroll job costing support, and you pay for the payroll extra. So QuickBooks, the software, has one cost, and the payroll service has a different cost, but it's all built into the software. It can do job profitability detail reports, and it can do estimates versus actuals, which is what QuickBooks Online really cannot do really well. Then when we move over to the right side, QuickBooks Premier or Accountant Edition, which has, quote, a contractor mode, there's a couple of really important features that it has that it pertains to construction companies and contractors. One, you can have billing rates, which means you can have different vendors at different billing rates. So when they charge you for their time and you turn around and bill that to your customer, you can pre-program that rate to be different depending on who was the vendor that did the work. So this is very relevant for subcontractors that you're going to use all the same item to record their cost and the same item to record the sale. The Premier and Accountant Edition also has the Job Costing Center, which we'll talk about on part 2. You can also track liability and workers' comp expiration dates on the vendor. So there's a little box where you can put an expiration date and then run a report. So you can have good notion of what's going on in terms of your insurances. It can add change order notes. So when you have a change to an estimate, it can add additional notes to, the difference between how it was and how it is now after you make a change. You can also create invoices from billable time in batch. So in QuickBooks Pro, you can always add one by one all your billable items times time and expenses. But in this one, you can create a 1 monthly batch where you can create all your invoices for billable time and expenses, which only pertains to time and materials type of job. So we'll discuss that as well. And you can also create a purchase order straight from an estimate, which is a real powerful tool, because if you create an estimate that contains all your subcontractors, ideally you can plan all the purchase orders that you're going to be creating, or in some cases they call them work orders. And there are more built-in reports. There's additional built-in reports into QuickBooks Premier or Accountant. There's one called Cost to Complete. There's Expense Not Assigned to Jobs, and a job status report. And we're actually going to cover that as well. And then finally, when we are in QuickBooks Enterprise, there's going to be 2 additional reports that you cannot find in Pro, Premier, or Accountant, which is the committed cost reports and the work in progress reports. We're going to cover both of those reports in part 2 of this webinar. And in addition, we're going to have additional custom fields in QuickBooks Enterprise. So if you want to customize it a little bit more, you get a little bit more of that. So here's a table of contents. This is what we're going to cover. Okay, so the idea is that we cover all of these in a live demo. So we're not really getting back to the slides other than reference point just to see where we stand. We're going to cover all these topics, starting with types of jobs and income expense recognition methods. Then we're going to talk about chart of accounts, double-sided items, which is a fundamental part of job costing. We're going to talk about creating jobs and managing job statuses. We're going to be covering doing job costing from outside payroll and not internal payroll on this webinar. We're going to leave part 2 for the internal payroll stuff. So we're going to talk about how to bring that information in through a journal entry or a $0 check, we usually call. And then we'll talk about using estimates versus actual reports and job profitability reports. Then on part 2, we're going to be spending a lot of time on the payroll-based stuff, although we're going to be covering timesheets in both episodes. We're going to be talking about the internal payroll more in part 2. We'll talk about dealing with deposits and retainage. We'll talk about dealing with inventory parts that are being charged to the jobs. We'll talk about invoicing for draws and payments versus earned revenue, which is a little bit different than just invoicing and getting paid. We'll talk about using vendor types and customer type to create some additional custom reports around it. We'll talk about managing change orders. And then finally, the work in progress and committed cost reports that are only on Enterprise. Okay, so let's jump to the live demo. And what I want to do is I want to start by talking about a chart of accounts. So obviously, every construction company is going to have its own chart of accounts. It doesn't have to be the chart of accounts that I'm using here. But in order to simplify the training and also simplify kind of visually how most folks consider chart of accounts for this, I created 2 major income accounts. One is called job income for time and material projects, and the other one is called job income for lump sum projects. So I'm going to record everything that's on time and materials in this one and everything that's lump sum on that one. I will explain the difference between the 2 as well. So a couple of things that are important to note is regardless of how you put this together, normally I would put an income account, the general construction income account, and then I would put individual income accounts under it that somewhat mimic the cost of goods sold categories. So I'm going to scroll down here for a second and show you what I mean. So especially and particularly with time and materials type of jobs, we're going to have expense categories that somehow mimic the cost of goods sold. So for example, I got materials income, and then I'm going to have a direct materials cost, right? Because the time and materials. We're going to have allocated, we're going to have internal labor income, for example, and that's going to have an allocated payroll expense in the cost of goods sold side, right? We're going to have permits and other job income, and we're going to have permits and other job costs. We're going to have demolishing and cleaning income, and we're going to have, we should have, in this case, it's not here, some demolishing and cleaning direct costs, and so forth. So we're trying to mimic the income side with the cost of goods sold side, specifically for time and material jobs, because most construction people, they want to see the money coming in and out from those categories in the chart of accounts. Now, chart of accounts, it won't be as relevant to the day-to-day as the item list. So I'm going to make this chart of accounts a bit smaller. Let me close all this stuff here. Okay, that way we don't have anything else but the chart of accounts. I'm going to leave this chart of accounts here to the right. I'm going to move it over to the right just so we can have a reference point of all of our income categories. I'm going to go into my item list. So this is going to be a bit more relevant for your day-to-day stuff. And I'm going to create items that represent all of these different income accounts. So I'm going to create my first item. I'm going to go to new. And I'm going to make a service. I should always be considering using service item when it comes to construction. I'm going to click on this checkbox that says this service item is used in an assembly or performed by a subcontractor or partner, whatever that means, a mouthful. Just always hit that checkbox because it basically means that the service item would have a cost component and has an income component. Okay, so on the item name in this case, we're going to call this one demolish trash, okay? I don't use the word income or the word expense in the item name because that's how we itemize it in our purchase orders, estimates, and that sort of thing. But then I'm going to make sure that on the expense account, I'm going to choose my cost of goods sold account that best fits this category. In this case, I haven't put my account there, so I'm going to create it real quick on the fly. So under my direct cost of goods sold category, we're going to do demolish and trash expense, right? And we'll create that cost of goods sold account, and we'll make sure that that is a sub account of my parent direct cost category, which is what I like to use for construction companies. So I'm going to hit save and close. So that's going to be there. And then on the income side, I actually have a category for that. So under my itemized income categories, which are going to be only for my T&M projects, my time and material projects, I'm going to have demolish and cleaning income. So notice I have my item name, I have my direct cost of goods sold account, and then I have my income account associated with this item, and then I'm going to hit OK. So I'm going to have my item already in my item list. And what I can do is use a couple of QuickBooks shortcuts to really speed up this process. So I'm going to right click in this one and click on duplicate item, and then I'm going to change this to materials. So I'm just calling it materials, just a generic materials account. I'm going to change my expense account from demolish and trash expense to direct materials and small tools. And then I'm going to change my income account into materials income. And I'll hit OK. I'll create another item here. And we're going to call this one labor. So in this case, I created it from scratch. So I'm going to call this one labor. Hit this little checkbox because I need to open the expense side and the income side. I'm going to have on the expense side, I'm going to have a cost of goods sold account called allocated payroll labor to jobs. And then on the income side, I'm going to have internal labor income. I'm going to hit OK. And then I'm going to right click on labor and I'm going to duplicate this item. And I'm going to do labor S, right? I'm just adding the S there. That's because I want to, but I'm going to do that to represent my subcontractors. So I'm going to have my subcontracted labor. So I'm going to have a subcontractor expense account here somewhere. Okay, let's go a little bit up. Okay, there it is, subcontractors. So I'm going to put, in this case, I'm going to put individuals eligible for 1099. And then under the income side, we will do subcontracted labor income. Then I'm going to hit OK. And I'm going to right click and duplicate. And I'm going to make a similar one called labor C, which means corporate or company. So in this case, I'm going to use it to track the labor that I'm paying to companies that I'm subcontracting. And for the income side, it could be the exact same thing, because for financial statements, it really doesn't matter whether you're subcontracting an individual or a company. This is just to organize yourself for 1099 time. And then we'll hit OK. And that's pretty much in a nutshell. Like we could probably do good enough with that, and that would be good enough for us to start creating some time and material jobs. So the reason why we did that, and we just covered the double-sided items, is because when we put this accounting together, we need to know at some point, how much of that item is being consumed versus our budget. And whenever we deal with that, we are dealing with the fourth method of accounting, which is called percentage of completion method. Notice that's missing an I. By the way, note to self, if you ever see an accountant that misspells accounting, you probably should worry. Anyway, so percentage of completion method is that most complex and most intricate type of accounting on the accrual basis spectrum. But when you choose what accounting method you use, normally these little construction companies don't really care too much about the items and double-sided items because they're going to be working on cash basis. But once you're going to get into accrual basis completed contract method and percentage of completion method, which we'll cover both through our examples, you really want to pay attention to those double-sided items. But the other one that's really important to pay attention to is what type of contracts or what is your relationship with your customer as a construction company in terms of the presentation of your bids. In some cases, we will bid a lump sum, which means we'll tell someone, yeah, we'll construct that house and it'll be $1 amount, right? $500,000. Or we'll do time and materials where we estimate all the cost of time and materials and then turn around and invoice you the time and materials actual expense plus whatever the markup that we have. So sometimes time and materials is called cost plus method. So hopefully through the examples, we'll be able to cover those. So that should cover us for the basic setup. Now let's go ahead and let's get started with creating an estimate. So what we're going to do is we're going to create an estimate, and we have these items that mimic a little bit of the chart of accounts. So when we present a financial statement, it will be very clear in terms of how that information is going to be presented in our financial statements. We're going to create an estimate that's going to use all of these items or some of these item components. So I'm going to go into customer, and I'm going to go to customer center. And the first thing I'm going to do is create my customer and create my jobs. Whenever you deal with job costing or construction companies, most of the time you will be working with jobs, not customers, which are a subcategory of customers. So let me create a customer here real quick. We're going to call it Best Customer LLC. And then we're going to create a couple of jobs under customer. So to create the job, you right click on the customer and click on add job, or we can click up here in the top where it says new customer and job. Click on that drop down and click on add job. They both do the exact same thing. So we're going to call this one project 1, and I'm going to put T&M next to it. So we know this is going to be our time and materials project. And then I'll go ahead and create another one where we'll add it. Let me add a job. We'll do project 2. I'm going to call this one lump sum. So as we start putting these projects together, you're going to see that there's a big contrast in how these are put together. So I'm going to go ahead and create an estimate for my time and materials job. So I'm going to click on new transactions and click on estimates. I can also go into customers, create estimates. That would give me the exact same thing. So once I have my estimate up, I need to make sure that my estimate template is set up to track markup. Markup is the single most important component of job costing. If you don't have that markup column, none of the other things I'm going to show you are going to be relevant. You have to have a markup column inside of the estimate. This is whether you use lump sum, whether you use time and materials, cash, accrual, percentage of completion, completed contract, whatever method you use, you need that in order to internally track which of your items are being invoiced or billed and completed and costed and all of that stuff. So generally speaking, there's a built-in template, I think it's under proposal, that will contain this markup column. Now, this markup column is a little bit interesting because most customers don't want to show their markup to their clients, right? They want that to be hidden. So by default, this column is actually hidden. I'm going to click on formatting just to show you. Formatting, and we're going to click on customize data layout. I'll click on copy here. And we're going to go into columns just so we can see. And notice that this is marked, but it's under screen, okay? But it's not under print, which means that this is going to show to the user using QuickBooks, but it's not going to show to the customer when it gets emailed or printed out, okay? So let's say we're going to put this project together. This project is going to have some internal labor, some materials, and some demolishing, right? So let's start with demolishing, and we'll put demolish floors, okay? And we're going to have an internal rate. So this is what my internal cost is. My internal rate, let's assume that we're going to have $25 employees working 20 hours on this job, right? So we're going to put 20 hours, and then we're going to put $20 an hour employees. So 25. Let's do 25. So I got 20 hours of $25 an hour employees working on this job. So my internal cost, and this is what amount means. Amount means internal cost. My projected or estimated internal cost, in this case, is $500. But then to my customer, I charge the equivalent of $75 an hour. So under markup, there's a couple of things I can do. One, if I know specifically what my markup percentage is, okay, so let's say, for example, I multiply everything times 3, I simply just put 300%. So if I put 300%, and note, I'm putting the actual percent sign, okay? If I put 300% and I hit tab, QuickBooks will calculate the markup at the equivalent of $75 an hour. If I don't put a percentage and I just put 300, it's just going to add $300 to my amount, right? So you can either go by just a dollar amount or a percentage amount. Okay, so the markup is the amount on top of the internal cost that you want to add up to that. So let me go back to 300%. So let's say we are planning to make some money on this labor. The next one, let's say we're going to call this one materials, and we're going to call this new tile materials. And let's say for whatever reason, I'm charging for 2,500 square feet, and I'm charging $4.5 per square foot, right? And sorry, I'm charging 4.5, but my internal cost, let's say, is 3.5. So I'm going to put 3.5, and then on my markup in this case, it's going to be 4.5 times 2,500. So I literally have to type in a calculation here. So the 4.5 times 2,500, and that's going to give me the amount that's being marked up. As a matter of fact, sorry, I apologize. 4.5 is a final price. The markup is actually just $1. So I do $1 times 2,500, which is 2,500, and then there's my markup. So I can go both ways. I apologize. I tripped myself on that. I'm going to delete the markup and do this one more time. Let's assume that I know what my final price is going to be. Then I'm going to put my cursor over on the total side, and then in here I put 4.5 times 2,500, and then hit tab. So if I know what my final price is going to be, I just calculate it in here. If I don't know what my final price is going to be, but I know how much on top of the $350 that I'm paying out of pocket or estimating to pay out of pocket is what I'm going to put, then I put it on my markup. So if I know that, it's just raise it to $1.25. So if I'm making $1.25 on top of my cost, I multiply that times the estimate, the estimated number of hours or quantity, hit tab, and this is going to be just my markup. So I apologize. So this is the markup portion. So this is not the final price. So if you know the final price, you calculate it in here. If you know your markup, you calculate it in here, or you can use a percentage if it happens to be a percentage-based type of scenario. Okay. So once we put the materials, now let's go ahead and put our labor to actually do the installation. So I'm going to put here labor, right, which is my internal labor, and we're going to put installation labor. And let's say my labor in this case is going to be 80 hours. And let's assume that my labor for installation is a little bit less than demolishing. So I'm going to put $15 an hour. And then on the markup, let's say I double this, right? So I'm going to put 200%, and then hit tab, and there it is. So let's say this is the job that I'm putting together. This is the proposal putting together. Now here on the bottom right, it's really, really important. You're going to see a couple of numbers that are actually really valuable. Subtotal actually means estimated internal cost. Markup is how much I plan to profit on this job. And of course, total is what the client is going to pay at the end. If I click on preview on the top right of the screen, you're going to see the final price to the customer. You're not going to see your internal cost anywhere because you don't want the customer to see that. And you're going to see the final price to the customer. This is an example of a hybrid time and materials and lump sum, right? So we're actually itemizing in time and material mode, but we're lump summing our margin or our profit together with it. So these are kind of a hybrid T&M and lump sum. Okay, so we're going to go ahead and click on save and close. Then once our project is ready, it's done. Typically, what you want to do is you also want to track the statuses of the jobs. So every job has a tab somewhere in the settings where you tell it completion date, ending date, and the status. So I like to do is I like to right click on the job and go to edit customer job, and then come down here to where it says job info. So I'm going to click on that little job info tab, and we're going to come here and do job description. So we're going to call this new tiles on residential property, and this is all internal information. Under job type, I can actually pick any from my job type list. So you can actually build whatever database you want. QuickBooks comes by default with these two things, residential and commercial. So I'll pick residential in this case. And then on the job status, I'm going to call it pending because my customer has not yet approved this job. And let's say that we're projected to start this job December 10th, and we're projected to end this job, let's say February 28th, okay, of next year. And there's no end date. You always leave the end date blank until you actually complete the job. When you complete the job, then you go in there and do the end date. Okay. So I'm going to go ahead and hit OK. And perfect. And one of the things I like to do is I like to see that information on my customer screen. So I right click anywhere in with my customer list, and then I click on customize columns. Then I'm going to come in and look for that job status information. So somewhere in here, we're going to see projected end date. I think that's a really good one to have. So I'm going to bring that over. I'm also going to bring in my status and job type. So there's my job type and my job status. Okay. I think this is good enough. So I'm gonna bring job description as well. That's useful. Bring that over, and then I'll organize this on, let's put description first, type and status, and projected end all the way to the end. I'm gonna click OK, and you're gonna see that this is really awesome. So what I can do is I can stretch my customer job list over here, and what I can do is I can organize it in such a way that when I'm looking at my customers and jobs, I'm also knowing exactly where all my jobs stand. So of course, you're going to organize this so it just looks best and it makes sense for you. So you may have to resize it a little bit until you get ideally what you want to see, and it doesn't take as much real estate. So that's what I like about doing in these jobs, because it gives me a good visual of what's going on with all my jobs, which are open, which are closed, and that sort of thing. So let's say, for example, our customer comes back and they approve the estimate. So typically what we do is on our estimates can either be active or inactive. So this estimate is currently marked as active. And the way I know it's active is because the button says marked as inactive. So a lot of my clients, what they do is when they create the estimate, they make it inactive right away. That way it's not part of their active estimate report, because you can run a report for all your active estimates. And then they come back here and they mark it inactive, they mark it active, which the label would say mark as inactive because that's a toggle, and that's how you know whether the estimate is active or not. So we want to make it active because it needs to be active in order for it to be relevant for the reports. Okay. And then the second thing that we do is we'll come in here, click on edit customer, and then we'll change it from pending to awarded. Okay, because our customer went ahead and they awarded the job, they approved the job, whatever it happened to be. So we'll go ahead and click on OK, and then we're ready to get started. Okay, so then the next step is we're going to incur some expenses, and after we incur the expenses, we're going to start invoicing our estimate. So let's say based on our contract, we had 3 invoicing conditions. We said we will invoice 50% of the job upon approval, and as soon as we get the first payment, we'll start doing the job, and then we will invoice, let's say we'll invoice 40% on completion, and then we'll leave 10% at the end after the job gets approved or the permits get closed, all of that stuff. So we're going to do it like that: 50%, 40%, and then 10%. So what we're going to do at this point is we're going to click on create invoice. So we're going to create an invoice straight from the estimate. We'll click on create invoice. Okay. And by default, if you don't select the option to do progress invoicing, QuickBooks will create the complete invoice from the estimate, and you will have to manually adjust the quantities in order to get a portion of the job invoiced. So you may want to make sure, let me close that you turn on progress invoicing. So to turn on progress invoicing, we're going to click on the edit menu. Then we're going to click on preferences. Then we're going to click on jobs and estimates. Then we're going to click on company preferences, and we're going to turn on progress invoicing. Okay. So once we turn on progress invoicing, we're going to be able to invoice them in pieces. So go ahead and hit OK. And then we go back into our customer center. go back into our estimate. And now when we click on create invoice, it's going to ask me a question. It's going to say, okay, based on this estimate, what would you like to invoice? If you select the first option, it would be identical to what I just did, where it copied the entire estimate over. If I click on create invoice for a percentage, this is just a straight percentage. So what this is going to do is add a percentage across the board to all the items. Or you can do create invoice for selected items. So we'll do an example of that, where you actually pick and choose the stuff that you're going to invoice. So let's say for this particular case, we're just going to do a straight 50% of the estimate. So we'll go ahead and hit OK. Okay. Try that one more time. I may have missed a button push there. So create invoice. Yes. 50%, 50. OK. There it is. And the one thing that you will notice is when the invoice is created, you have a new column there that says total, and you have a column here that says estimated amount. What progress invoicing will do essentially is keep track of what you thought you were going to invoice at the beginning, how much you have invoiced partially if you've done them in phases, and how much are you invoicing all the way up to the point of this invoice. So this is a 50% invoice from the job. And essentially the only thing that it does is it goes into the quantities and it makes the arithmetic calculation to multiply all your quantities times that 50%. That's pretty much what it is. So if I'm going to show this invoice to my customer, I'm going to go to print and click on preview. This is exactly what it looks like. Okay. I'll go ahead and click on close. Then I'm going to click on save and close and click on yes. And then we're going to take a look at our profit and loss report so we know exactly what's going on in our financial statements. So notice that because we have the chart of accounts broken down by each income category, we see how much we have recognized for demolish and cleaning income, how much we have recognized for materials income, and how much we have recognized for internal labor. By the way, when you look at the different contract methods, what I just did, in essence, is what type of recognition method. Was that accrual basis? Was that cash basis? Was that completed contract basis? Or was that percentage of completion? And some folks, especially if you're not in the accounting industry, would say, oh, that you did a progress invoice. That means that it's percentage of completion. The answer is no. What we just did is straight accrual basis, right? I just picked a percentage out of the blue based on maybe some invoicing conditions from our contract, and I invoiced it. So what we're seeing here, it's accrual. This is accrual-based method for construction accounting. If I was using percentage of completion, I would do an entirely different thing. We'll do an example of that as well. So that's where we are so far in terms of creating the items, doing the estimates, setting up the markup, and doing the progress invoicing. Let's go ahead and run a polling question here. So let's see how many we've done so far. We've done 2. So this is perfect timing to run a third one. And again, I apologize about the technical difficulties. I think rescheduling the webinar would have been the smart thing to do, but we had 190 something people live and you stayed. So that means that you wanted to hear it. So we're glad that you stayed, and hopefully you've learned something new already. And as we get deeper and deeper into it, you'll get something out of it. And by the way, meanwhile, if you have any questions for me about what I'm covering, you can add them into the questions box, and that would help me know which direction to go, or to go deeper or not deeper in a certain topic. So one of the questions I have here is, what was the point of the markup if you don't see them in the financial statements? So really good question, Tom. So the markup doesn't play any role right now. It will play a role when we bring the cost in and when we compare the cost that we estimated versus the actual cost. So that's going to come in a little bit later on. Good question. Okay. Then we can close the polling question at this point.
Go ahead and close the polling question. Thank you very much for that. So that was the fourth polling question, by the way. So I missed one while I was out. So yeah, that was the fourth polling question. So we've done 4 polling questions so far. Okay. All right, perfect. So now let's move on to like job costing, the actual title of the topic, job costing, which is assigning expenses to the jobs. So one of the things I like to do is I like to keep the financial statement open while I do the work. That way you can see in real time kind of what's going on with a financial statement. So I'm going to leave my profit and loss kind of up and running there while I enter different expenditures. So what I'm going to do is I'm going to start with just creating a regular check. So let's say that we ended up bringing in a subcontractor. Okay, let's say for whatever reason, we ended up bringing a subcontractor into the job because we couldn't have our employees finish it in time. And so let me create here a subcontractor. Let me have Stephen Martin, who's one of our subcontractors. Create them as a vendor, and let's say we pay them $1,500 to help us with the demo. Now, this is the single most important thing, and I need you to pay really in-depth attention to it. Really, really pay in-depth attention to this. Whenever we do job costing, construction accounting, we don't ever want to put direct expenses into the account directly. We want to skip that or resist the urge of using that directly, because most of you will grab this and say, yeah, sure, that's a subcontractor expense. You should just put it over there where it says, subcontractor, 1099, whatever happens to be, and put it straight in there. Don't do that, right? Avoid doing that. And that's because you don't get the detail that you want in the reports. What you want to do is you want to switch over to item. So you want to click on that item tab there, switch over to item. And this will be true for bills or credit card expenses as well. And then we're going to pick the actual item that belongs to this expenditure. So we're going to pick labor S, who's our individual subcontractor item that we have. And let's say that he charges $15 an hour times, in this case, times 100 hours, right? So we're going to put here quantity 100 times $15 an hour. And then we're going to pick the customer job. This is everything, right? Selecting the customer job, it's all that job costing is. Right? A lot of folks get a little bit over worried about job costing. Job costing, all it is if you have an expense, assign it to the job. That's all it is. And then this little checkbox here, the billable checkbox, this is designed only if I plan to invoice my client separately for this specific expenditure. Now, this expenditure was already built into our estimate. The cost component was somehow built into the estimate, right? Maybe I made a mistake internally and I ended up incurring a bigger expense, but I do not plan to invoice my client separately. So if I don't plan to invoice my client separately, I don't want to use that billable tab. So I'm going to click on that checkbox and get rid of that billable tab. Okay. To add one step further, some construction companies like to use classes. Now, I personally don't see a whole lot of value in using classes, but I have many clients that want to have 3 classes. Usually the classes they want to set up is labor. The second one they like to set up is materials. They have one for equipment and admin. It's typically what they like to do. Now, some construction companies like doing more things or less things. So if you want to do labor, materials, and admin as another layer of reporting, you can do so. I find absolutely no value in this, but you can do that. So if I'm going to follow the pattern, in this case, I'm going to pick labor. Okay. Then I'm going to go ahead and click on save. Okay. And then you're going to see immediately that we have that $1,500 being sent to that subcontractor expense account. Now, let's just assume for a second, when we go back into that same check, let's go for a second that $1,500 wasn't for that job, it was for 2 jobs. So we can actually split that. So we can actually send part of it to one job and part of it to the other job. So let's say that it was 60 hours on one job and 40 hours on another job. So essentially what we do is we select the second job that the labor is for, and I put, in this case, unchecked billable, and I also pick the same class just to be consistent. So if I'm to do this, both of these items are still gonna hit my subcontractor expense account. So my profit and loss on the right-hand side shouldn't change at all. So I'm going to go ahead and click on save. So that shouldn't change at all. But if I pull this profit and loss and I were to change it to columns from total only to customer job, now you're going to see the expenses are going to be allocated across two jobs. So we have $900 to project one and $600 to project two. So that's assuming that we're going to look at a profit and loss by job. If we don't look at a profit and loss by job, then we're going to see the entire $1,500 go into our subcontractor expenses. Okay, let's go ahead and hit save and close. So let's say that now we're going to purchase some tiles, right? The actual materials we're going to purchase from a local tire distributor. Okay, so let's go ahead and go into vendors, enter bills, and let's say this is Miami Tiles Corp. Create my vendor, and let's say we're going to spend. We're going to put here materials. Remember, we created a materials item. And as I mentioned earlier, resist the urge of using the expense account and sending it to the materials expense account. Don't use expenses, only use items. So we're going to come in here, and let's say that was 2,500 square feet, and he ended up paying $3.85. I remember I thought I was going to pay $3.50 for it, but I ended up paying a little bit more for whatever reason. So I'm going to put that there just because it's important to keep track of what you originally thought you were going to pay versus what you actually paid. So if you remember the estimate, that's actually a little bit over what we estimated. But this contract wasn't a variable contract. The client agreed to a particular dollar amount regardless of what expenses come to play after the fact. Let me close this here. Okay. And then I'm going to select the customer job, which in this case is project one. And I'm going to uncheck billable, save and close. So now we're going to see an additional item in our profit and loss, which is our direct materials and small tools. Perfect. Okay. So now that we have half of the invoice invoiced, and we have all the material purchased and some of the labor spent, currently I have a profit and loss statement telling me that I'm losing money. The problem is that that's not really accurate because I haven't invoiced the whole job, and I also haven't brought in the entire expenditures, which is why I don't think cash basis or straight accrual basis is a good basis for construction. You want to use either completed contract method or you want to use the percentage of completion. Now, one of the key questions that we get at this point is, why are we using items and not the accounts directly? So here's the answer to that question. When I click on reports and I go into industry specific, because I'm in the accounting edition, and I go to contractor reports, okay, we're going to see all of our reports here. For example, one of them is job cost by vendor. We have job cost by job. So we can actually break all those down. We have unpaid bills by job. So we have all sorts of reports that are important. But we're going to do cost to complete by job detail. That's a really important one to look at. So we're going to go to cost to complete by job detail, and we're going to select the specific job, which is project one, and then we click OK. Okay. And in this case, let's say that at this point, I'm gonna say, right, today, as of today, we 100% completed our demolish. Let's say that I've done about 25% of the labor, and I've paid for 100% of the materials. And then I'm gonna click OK. What this report does, and it's a really awesome report, and you have to use items, because if you use accounts, it don't show up on this report. So the quick answer to that question is we use items because of this report. And there's another sister report to this, which I'll show you real quick. So what this report tells me is, it tells me, according to your estimate, you're supposed to spend $10,000 on this job, okay? According to your overall assessment of this job, you have already paid for the entire demolition, or you completed the entire demolition. You have completed 25% of the labor, and you have bought 100% or consumed 100% of the materials. It looks here that I'm already very close to consuming my entire cost budget. We're actually at 91%. So in theory, I should be invoicing, right, about 95% of my job, but I only invoice about 50%. So obviously that's not showing the correct income. Now the other piece here is cost to complete. This tells me my budget. According to my budget, I only got $900 left to spend on this thing. Okay, and you can compare, how you are based on the progress, whether you are under or over. So this is a great control mechanism to see where am I overpaying and where am I underpaying. Okay, so there's a sister to this report, so I'm gonna leave this up here. I'm gonna run the other report. So I'm gonna go to reports, job time and mileage, and I'm gonna click job estimates versus actual summary. Okay, I'm gonna bring that over here. Okay, so I have my project one, and I want to also say something really important. The report in the bottom, it's available across all versions of QuickBooks: Pro, Premier, Accountant, and Enterprise. And the report in the top, it's only available in Premier, Accountant, and Enterprise. So the one at the top is not available in Pro, which is one of the reasons why I think it's just so valuable to have at least Premier or Accountant. Enterprise would be best, of course, for these type of companies. So if you look at the report in the bottom, you're going to see estimated cost is obviously a much simpler version of that report. Estimate versus actual cost lets you know exactly where you are in terms of what you thought you were going to spend versus how much you're actually going to spend. It tells you the difference, which is basically your under budget in this case, which is $75. It tells you how much you're supposed to invoice based on your initial estimate, which is $17,000. And then it also tells you the actual revenue, which is what you have invoiced so far, which is $8,000. Now I have to make a really important note here. It's a common question that I get. This is always in accrual, always in accrual. There's no way to show this report on cash basis. So when they say actual revenue, that means how much is on an invoice. It doesn't mean how much I got paid on my invoices. So this is all based on accrual and based on the existence of an invoice. So the invoice exists, it shows up in this report. Okay, perfect. So these reports are the baseline as of why we use items and not expense categories. Okay, so let's move on to adding some other components of payroll, maybe another subcontractor using a timesheet. So I want to use an example using a timesheet. So I'm going to go into vendors. I'm going to go into employees. I'm going to go enter time, and then I'm going to click on use weekly timesheet. So let's say that this vendor or subcontractor, Steven, where you see, you type Steven Martin, we're going to pay them through timesheets. So they're going to give us a timesheet, and we're going to generate these payments through a timesheet. So we're going to fill out a timesheet, and you would use a timesheet either for an employee or a subcontractor, assuming that subcontractors don't give you an invoice that you break down from, that you actually trust this internally. And what you do is, let's say, for example, that this week, Steven worked in 2 jobs, right? So we're going to pick the 2 jobs that he worked on. He worked on job 1 and worked on job 2. Okay. And the service item in this case would be labor S, because we had this labor S item created that's pointing to the right account. Under class, we're going to put labor and labor because we're just following through and using classes. Although, as I mentioned earlier, I don't think classes make such a huge deal. And then we're going to put in the hours. So let's say on the 3rd, he worked 8 hours. On the 4th, 7. On Wednesday, he worked 4 on one job. And then he walked across the second job and he worked 4 hours on the other job. Then on Thursday, he worked 8 hours on the second job. Then he took a Friday off and he came in Saturday for 3 hours to work on job 1. Okay. So this is, in a nutshell, how you put a timesheet together and how you split them up by job. Okay. So we got line 1, job 1, and line 2, job 2. Under billable, I'm going to unmark him because I do not plan to invoice my client separately for these. These are all part of my internal job costs or my internal costs based on a lump sum project or a quasi lump sum project that I gave to my client. So I'm going to uncheck those two, and then I'm going to click Save and Close. Now, I want you to pay really close attention on the right side of the profit and loss and tell me and notice what happens if I create a timesheet and I have job costs associated with it. So I'm going to go ahead and click on Save and Close. Now, what you should have observed that absolutely nothing happened to the financial statements. Timesheets are non-posting. The timesheets do not affect my financial statement. What affects my financial statement is what I do with the timesheet. So the bill that I create with the timesheet, or the check that I create with the timesheet, and then or the payroll that I create with the timesheet. Now, one of the really great things about QuickBooks Desktop is I can create a bill straight from a timesheet. So let me show you what that means. So let's say at the end of the week, I'm going to create a new bill. I'm going to select my vendor, Steven. And then I'm going to get a checkbox that says, hey, there happens to be data on a timesheet for this vendor. Would you like to copy that timesheet over so I can create the bill based on that timesheet? So let's say we're going to click on yes. Then we pick the date range. So let's say we want everything from the first of the month to, let's say, the 15th. So we're going to, let's say we create bi-monthly, semi-monthly bills from this vendor. So I'm going to do it for the first 15 days, hit OK. And then QuickBooks is going to bring all the information over from the timesheet, bring in all the hours, okay, and all the job costing information and the classes if you're using it. The only thing that it didn't bring in is the cost, because we don't have cost associated with this item in the item. So I'm going to hit X for a second and click on No, just to show you the difference. So if I actually go into List and I go to Item, and I go into my subcontracted labor and edit that and put that this has a cost of $25. Okay, so I'm actually doing it in my item list and click OK. Then when it comes down to creating that vendor bill, I go to a bill, select my vendor, and then I click on yes, right? Because I want to bring in my timesheet data. I do it from the beginning of the month to, let's say, the 15th, and hit OK. All my timesheet information comes in, but now the cost automatically populates because it's based on the cost that's on the item list. So at this point, I always get the question is, what if I have multiple vendors that charge multiple rates? Well, if that's the case, then you would have to create a different item for each vendor and make sure you pick the right item for each vendor when you're entering them on the timesheet. So that's really all it means. Okay, let me close this thing that's popping up here. Okay, so that's how we create a bill straight from a timesheet with all the job costing information. So when I click Save and Close, now I'm going to see that in my profit and loss report, I should see some additional job costed labor in there. Okay, so let's say I'm going to go now to my next condition. Let's say I'm done, right? I finished the job. So I'm going to go to my next condition, which is invoice the remaining 40%. That was that condition of the second contract. So I'm going to go into my customers and then click on estimates. Then I'm going to go find that estimate. So I'm going to select my customer job and click on find. There's my estimate. Then I'm going to click on create invoice. I click on save. Then I'm going to click invoice based on a percentage. So in this case, I'm going to pick 40% because that was the second condition, that I can invoice 50% to start, 40% on completion, and maybe another 10% towards the end. So I'll click OK. And at this point, it's going to create an invoice that it's only using 40%. And then notice that under total, this really should say accumulated total. So you can actually customize it and change that for your customer to see. But this is the total to date. So I have invoiced 90% to date, right? So in this case, if you wanted to tell your customer that this invoice is just 40%, then just add a note and just put second invoice based on contract 40% of job. Okay, that way we don't confuse with both instances of the information. I click on save and close, and then I look at my financial statement, and I'm finally positive. Now, once you complete the job or almost complete the job, like now we're 90% in, then we're going to run a estimate versus actual summary so we can know exactly where we spent more or less than we were supposed to. So I'm going to go into reports, and I'm going to go into jobs, time, and mileage. Then I'm going to go into job estimate versus actual summary or detail. Either one works, but I'm going to go into detail so I can see it at the line item level. So I'm going to go to detail. I'm going to pick my job, which in this case is project 1, time and materials, and then I'm going to click on OK. Okay. So what we want to see is what we wanted to spend, what we thought we were going to spend, versus what we actually spent. Right. So it looks like on the demolish or trash, we were supposed to spend 500, and we spent 0. On internal labor, we're supposed to spend 1,200, and we spent 0. On subcontractor labor, we were supposed to spend 0, and we spent 1,450. Of course, what ended up happening is that we used these two items to actually calculate our estimated labor cost, and we ended up using a subcontractor for it. So we would have to then infer, whether that's an over or an other charge. And this happens quite a bit, where the estimate itself, you use items that maybe you weren't specifically intending to use. But the important piece about here, the important lesson you draw from here is the difference, which is the over and under. So in this case, I overspent $625 on this job. Now, in contrast, this other half is different. This says how much I'm supposed to estimated to invoice in total, how much I actually estimated, and what I'm pending to invoice, right? So the first one is, what did I think I was going to invoice? What have I invoiced so far? This is how much over and under I am on the invoice. Now, this doesn't tell me whether I invoiced less because I ended up charging less, or because I invoiced less because I haven't completed my progress invoicing. That would be a different report altogether. Perfect time to do another polling question. So let's go ahead and do a polling question. And this is the time where I'll ask you for feedback. I apologize, the first 20 minutes was super messy, but hopefully you got something along the way. And I would love to know whether I'm going too slow or too fast. Not so much on personal pace, more about the complexity. So that would help me quite a bit. And Matt, if you're there, if you can hear, what's the audio like? Has it been choppy at all, or has it been good? It's okay. Matt, you can take a nap. That's totally fine. Okay. So, all right. So we got the 5th polling question up, guys. So you want your CPE certificate. Make sure that you answer the 5th polling question. It's 8 in total for this 2-hour webinar. By the way, I've gotten to the point that I no longer like 1-hour webinars. I feel so rushed in 1-hour webinars. I feel that 2-hour webinars, even with that 15-minute delay that we had, I just feel I have a bit more space to expand and go into detail. I do a lot of webinars, and I gotta tell you, that 1 hour is just not enough for me anymore. So I'm really, really enjoying this 2-hour webinars. Okay, so we have 95% of the votes in our CPE, so let's go ahead and close that. So I'm gonna click on close. Okay, all right, so we've done a time and materials problem. Now let's go ahead and do a lump sum job problem. And this one gets really, really interesting. I'm gonna leave the P&L up in the right because I think it doesn't take that much real estate. I really like to always see kind of what's going on in the financial statements while I do it. But let's do a lump sum type project. So I'm gonna go into customers, click on create estimate. Let me make this a little bit bigger. I'm going to select my second job, my lump sum job, project number 2. And then the other pieces that I want to do in a lump sum job is I can still track internal costs by line item without specifically showing my client the cost. That's possible. That's very, very, very much possible. So the way that works is we're going to create groups that have hidden items. I'm going to go into my item list here, and I'm going to create the items that I want to use for this type of project. So I'm going to create a new item here. I'm going to go service, and in this case, I'm not going to use the two-sided item because this item is going to be used solely and only for the job income, for the job income. So I'm going to put here job price. Notice that I'm just calling it job price. And I'm going to send this over to my construction income lump sum account. I could also just call it construction job. Let's do that. Construction job price. Simple. Okay. We can copy over that to the description. That would be fine just as well. And notice I'm sending that to my one construction income account. So I'm going to click on OK. And typically with lump sums, we add some adjustments to the job. So I'm going to do one more item just in case I have adjustments, and we're going to call it change order job adjustment. Okay. So with this one, I do a change order or a job adjustment item. And I'm going to send this to my second line in there, which I call it adjustments to invoice income. So that's either adjusting down or adjusting up. So we're going to put here change orders on lump sum contract. Okay, because typically with change orders we just quote them as will be an extra 2,000, extra 5,000, that sort of thing. Okay, all right. So we're going to go ahead and click OK. And both of these items are only for income purposes. So I don't track expenses with those items. I only track income. Okay, I'll show you what I mean by that. So I'm going to come in my proposal, and I'm also going to create, let me go back into my item list. I'm sorry. Yeah, I'm going to go into my item list, and I'm going to go into item, and I'm going to create a new item, and it's going to be a group item. So I'm going to create a group, and there's a little checkbox here that says print items in group. I am not going to check that. I'm going to leave that unchecked. Okay, so I don't want to print the items from the group, and we're going to call this one construction job lump sum. Okay, I'm going to copy that into the description, and then I can pre-build some items in here. I don't have to, but I like doing it anyway. So I'm going to come in here and put my 3 labor items, my demolish, my materials. I'm going to do my construction job price and construction job change order. Don't worry about what these are called. The customer is actually not going to see any of these, so they become all irrelevant in detail to the customer. They're only valuable to the end user. So I'm going to go ahead and click on OK. So now that I have my group created, again, this was a group, and we didn't click on print items in group. Once I got the group created, when I put my project together, I just select that one item called construction job lump sum, and that's misspelled. Sorry about that. I had a fat finger there. Let me take the last P out and hit OK. Okay, so it's got construction lump sum, and then in here internally, I'm gonna do all my internal estimates the exact same way as we did it before, but I'm not gonna mark up any of them. So lump sum is very, very much different than time and materials because we don't itemize each of the line to the customer. We internally itemize the cost for our own purposes. So for example, let's say that we plan on this job, we plan to spend $25 an hour, about $100 of internal labor. Remember that labor item is for internal labor only. And then under markup, I'm going to put negative 100%. Okay, because I don't plan to mark up my labor. I'll explain in a second. Okay, Then let's say I'm going to bring in a contractor to maybe help me do part of the job, and that's going to be a flat cost of $20,000. And again, my markup is going to be negative 100%. Then let's say I'm going to subcontract a person that's going to charge, let's say a specialist for $10 at $75 an hour. And again, 100% negative. One more time, right? None of the line item details we're going to mark up because we're not going to make any money on that. We're only making money on the price itself. Let's say for the trash, we're going to bring in an outside company that's going to charge $750. Same thing, negative 100%. And then on materials, we estimate about $30,000 worth of materials. And then the same thing, negative 100%. Okay. So when we do that, we just put negative. When we do that, essentially all we're using this is to track our internal costs and our internal costs only. Here on the bottom of the screen tells me exactly what I plan to spend on this job. This is my out-of-pocket cost, be it payroll, subcontracts, or whatever it happens to be, $54,000. And for this job, I plan to charge $100,000 flat. So what I do on this item here called construction job price, I'm just going to put in $100,000. And then I'm going to leave the change order one just in the estimate, just in case I need to do something with this later on in the future. Okay. For everything else, I make sure that for that last one, I'm going to put a 0 for the quantity because I don't want that item to even be used in any way, shape, or form. So only on that last one that I'm leaving there for change order, and that's 100% optional. You don't have to have that in there. Only for that one, I'm going to leave, put a 0 there. So this is telling me right here what's going on, right? I plan to spend $54,000. I'm marking it up $46,000, and I have a total of $100,000 that I'm going to charge for this job. When I show this proposal or estimate to a customer, this is all the customer's going to see. They don't see any of the details. They don't need to. But this is a lump sum project. Okay? The only thing they're going to see is $100,000, which is the only thing I plan to charge for this job, unless there's a last minute change of some sort. Okay, so I'm going to go ahead and click on Save and Close. And let's go back into our Customer Center. And let's talk about the statuses real quick. So I hinted at this at the very beginning that I find it really, really valuable. Let me get rid of this attached column. I hate this attached column. It's kind of useless. And click OK. It just takes valuable space here. So now that we're here, we're going to go ahead and close this job out. So I'm going to go into Project 1, right-click, and click on Edit. I'm going to go into Job Info. And let's say that we ended up closing it today. And I'll bring this back a month. I'm going to go to End Date and close that as well. So I got the projected end date and the end date. If you want to keep information about when you thought you were going to complete it and when you actually complete it, that works as well. So that's really up to you. But I think the most important thing is to put something in end date, letting me know that that job has been finished. Okay. And then under job status, at this point, I would move it to closed. Then I'm going to click on OK. And let's say once again, my second job gets approved. So I'm going to right click here, go to Edit Customer, go to Job Info. Let's call this one a expansion on commercial property. Right, whatever description I want to use. Job type, we're going to put that under commercial. Job status, let's say this has been awarded. Okay. Start date, let's say this starts at the beginning of December. Projected end date will be the end of the year. And end date stays blank because it hasn't been finished yet. And I hit OK. So all this information becomes relevant either on this screen or in my job status screen. So when I click on Reports and I click on Industry Specific Contractor Reports, you're going to see a report called Job Status. And that one's only available in Premier, Accountant, or Enterprise. But you can build one manually if you have Pro, by the way. So when I go to Job Status, then I'm going to get a report that tells me all of my jobs, their statuses, their type, the description, start date, end date. This is really, really important management information, right? A lot of folks enter this information for management. When I click on customize report, there's a couple of things you can change here and there. There isn't that many pieces of additional information that would be relevant here. So you can see the fields that are available here. But there is, in some cases, you can bring customer type if you're using that, terms, rep, notes, that sort of thing. That stuff could be relevant in some cases. But I'm going to tell you something that I like to put in here, because unfortunately I can't bring it any automated way, is to put in my current work in progress percentage. So I'm going to show you how to do that. This is more of a personal trick. So when I go into my jobs, okay, I can double click on my job and go to additional info. I'm going to create a custom field. I'm going to click on define fields, and I'm going to call it internal WIP assessment. You can call it whatever you want, really. Okay, internal WIP assessment. And I'm going to click on make this a number. Okay, we're going to do a WIP percentage assessment. Just give that a number and then click OK. And then what I end up doing is, if I want to internally, for my own internal reports, I want to know kind of where these jobs are. So I'm going to put this one, let's say, at 15%. Okay, and I really don't need to put a percentage on it. Just put 15% in there, 15.00. And then I'm going to go to my other job and put it at, let's say, 95.00, and then hit OK. Then when I look at my job status report, I can add those fields. So when I go to customize report, I can look at my internal WIP assessment. Okay, I can just call it WIP percentage, right? I think some folks prefer that. I think most of my clients do this, just WIP percentage, just like that. Simple, easy. So you can do that as well. You can just change the item there. So when you go back into that report, right, you're going to see the percentage on each job. And this information may or may not be relevant. Depends on how you track reports. I've dealt with so many construction companies in my life. Everybody has their own little system on how to do this. But I found this very, very useful, because a lot of these folks are looking for just a report that shows that number in there without calculating from anywhere. This is a number that they put in there. This is their own grading scale per se. Okay. So anyway, so we'll go back into our estimate. Where's our estimate? Go back into our estimate here. Okay. And what we're going to start doing is, I'm going to close this invoice. What I'm going to start doing is I'm going to start entering some of the expenses related to this specific job, so we can start job costing some of the things to this job. But before I do that, let me run one more polling question. And I believe this is the 6th polling question. So we have 6, 7, and 8 left. And Jessica, how far did you get with the T-Sheets demonstration? How much time am I going to need at the end? Do you need to do something else at the end for T-Sheets?
Oh, hey, Hector. Jessica was able to jump in and do her full, talking about T-Sheets and launch T-Sheets both. So you're good to the full rest next 28 minutes.
Oh, awesome. That's great.
Perfect.
That's great. Another quick reminder. This 2-hour webinar is part 1 of a 2-part 2-hour webinar. So this is really a 4-hour webinar split into 2 parts. So keep that in mind, that we're going to have, just check out CPA Academy for the next time we run that part 2. So, alrighty, so we got the polling question up. We got about 88% of the answers. Please go ahead and add your answer there so we can give you your CPE certificate. Alrighty. Okay, so we got about 91% of the votes in 1 minute and a half. Let me go ahead and close it at 1 minute and 30 seconds. Going once, going twice. Okay, so we were doing a a proposal for a lump sum project. We showed you how to run the job costing reports. We showed you how to do a T&M, time and materials job. So what we're going to do is we're going to start adding some of the costs associated with it. Okay, so let's do a couple of quick ones. Let's do a timesheet again. So I'm going to go into employees, enter time, and use weekly timesheet. And let's say that this one subcontractor, the one that was going to charge us for 10 hours, $75 an hour, is going to go ahead and do the timesheet. So let's go ahead, let's call her Mary Roberts. Okay, and she's going to be a vendor because they're not an employee, they're a subcontractor. And then they came in here and they came to project 2, and this was subcontractor S. And let's say they came in on Wednesday and it was 10 hours in total. So they spent all 10 hours in one day doing that job. And let's say finished work, right? Whatever it is. So I'm going to go ahead and click on save and close and save. So I'm going to enter the bill, go to vendor, enter bills, select Mary, hit yes. I want to use a timesheet. So I'm going to do the date range for the entire month. Let's say, for example, hit OK. And if you remember on the previous example, we had set the cost per item at $25. So because we're using the same item, it's going to default to whatever is set up on the item list. So I have to manually change this to 75. If I want QuickBooks to keep track of the different costs, I would have to essentially use different labor items, or I would have to turn in an option called billable rate level list. And we're going to cover that on part 2 of this webinar because that's a really nice feature as well. So we're going to go ahead and complete this bill, save it. So we have now that expenditure in the books. Let's say we're going to bring in now a major subcontractor to do part of this work. And one of the things I like to do is to, once you enable purchase orders, and we're going to cover that on part 2, I like to create the purchase orders straight from the estimate. That way we can have sort of a link between all the purchase orders, that we're sending to our contractors or subcontractors, or even for material purchasing. This time I'm just creating them from scratch, but on part 2 we'll cover that because that's a little bit more pertinent to like QuickBooks Premier and that sort of thing, because QuickBooks Pro cannot do that. Okay, so I'm going to go ahead and enter the bill. So I'm going to go to vendors, enter bills, and let's say we have a major contractor, so large subcontractor LLC. Create that and resist the urge of using expenses, use items. I'm going to put here labor C, and let's say we're going to pick the job here, lump sum project 2, and let's say they ended up charging $21,500. So we kind of underestimated this one a little bit. So this is going to go to $21,500. Uncheck billable because I don't plan to invoice my client for this. It's part of my original estimate. So let me go ahead and save that. Let's say, for example, I had some credit card charges where I bought materials. I'm going to show you a different transaction that you can also use to do job costs. So let me go ahead and click on enter credit card charges. And again, resist the urge of using expenses, always use items. And let's say we went to Home Depot and we spent $28,000 in materials. So we're going to pick here materials. And let's say we ended up spending $28,627 in materials. And we're going to pick customer job project 2. I'm skipping cost at this point because we really don't need to have it. And I'm going to unmark billable. Okay. So we went to Home Depot and we bought some materials, and this was $28,000, and that goes to project number 2. And then I'm going to go ahead and click on save and close. Okay. And then let's say we had some person that we're bringing in to demolish the job, and we have to pay them as well. So I'm going to pay them with a check. I'm going to go into banking, write check, and this is Demolish and Clean Co. and let's say they ended up charging us $815 because we estimated it basically. And then under item, we're going to pick the demolish and trash item, and we put the same $815, and this is going to go to job number 2 and unmarked billable, because we're not going to invoice our client separately for that. And then we click save and close. So it looks like we created the bills for most of the vendors. We went ahead and paid for the materials. We went ahead and entered the credit card charge for the materials and entered a check to pay one of our contractors. So we've done almost every type of job costing. The only one that we have left is labor. So I'm going to do labor in a second, right after the next polling question. But the labor that we're going to use is outside payroll. So we're going to use an outside payroll company, and we're going to bring that information in, right? Because I want to make sure I show you that. And on part 2, we're going to be doing internal QuickBooks payroll and how that stuff works. So let me run a really important report, jobs, time, and mileage, and we're going to run our job estimates versus actual detail. And we're going to pick this for job number 2. And I haven't invoiced my client yet, so we're not going to see any revenue yet. Okay, so as you could tell, our revenue right now is at 0. Okay, no revenue. But what we're really looking for is what's going on with our cost. This stuff is really important here. This is the meat and potatoes of managing a construction company, right? We have our demolish and trash, which we went over by $65. We have our internal labor, which we haven't allocated to the job yet. We have our subcontractor that we ended up paying a little bit more, right? $1,500 over. We have our subcontracted labor that we ended up paying a little bit under. That stuff happens, right? Actually, no, we ended up paying double actually for our subcontracted labor. And we have our materials, right, which we paid a little bit under. So right now, as it stands, I still have a little bit of budget left of $1,408 for this job. But the minute I allocate my internal labor, that number may move as well. Okay, so that's what that is. And then you run the job profitability detail report, which is a really important one to have, which is job profitability detail. Run that report and select project number 2, and then hit OK. Okay, so when we look at this report, we get to see how much we paid for each item and how much we have actually invoiced for the item. Now, once we invoice that job, that number will still be 0 because we're not itemizing, we're not charging cost plus, and we're not doing time and materials. So let's go ahead and do that. Let's say, for example, I'm going to invoice the entire job. So I'm going to go to create invoice, and I'm going to select 100% of the invoice and click OK. So my entire job is being invoiced. I'm going to show you a print preview to see what that looks like. Notice there's only one item, right? The customer doesn't see any of those details. We see them, right? But we're not charging for any of the items. We're charging for one lump sum, which is our construction job price item. So we'll go ahead and click on Save and Close. And hit Yes. And then we're going to look at our lump sum report. And this is how all lump sum reports should look, right? You will see revenue from one item, which is my construction price. And you're going to see costs from all my other materials, no cost coming from my lump sum sales price of my job. And so far, my profitability is $47,000 on this job. Okay, let me run the 7th polling question. And go ahead and put your questions in the questions box if you have any questions, comments, or concerns about what we're discussing here. Okay, polling question is going to be up for another minute. This is the 7th polling question. make sure you answer the 7th polling question. We have one more polling question left, so make sure you answer that. Okay, we got about 95% of the votes. I'd like to leave it up for a full minute and a half. Okay, perfect. So go ahead and close that. Okay, closing that polling question. All right, let me minimize the screen for a second. So let's say, for example, that the total amount that's being taken out of my bank for a third-party payroll company that I'm using is $20,936. So again, this is the total amount that's coming out of my bank, okay? So when I actually pay this through QuickBooks, this will be a check or a bill or whatever you want. It will be like a regular transaction. So we're gonna go into bank, write check. We're gonna put here ADP, outsourced payroll, whatever it is. Create that vendor. And we're gonna break that down, right? So we're gonna break it down like this: salaries and wages, payroll, workers' comp, and payroll fee. Okay, so we're not gonna use items in this case. We're gonna use expenses. So I'm gonna show you how this works. Okay, we're not gonna use expenses because it's my regular expenditure. So I'm gonna go to payroll expense and put my wages. Then I'm gonna go to payroll taxes. Then I'm gonna use my workers' comp. And then we have our payroll processing fee. And I'm gonna bring all that information in there. So let's bring that over, 15,568 or 658. And again, in these particular cases, you're just basically copying from a report, right? Because it's the third-party payroll company that gives you all the information. So we bring this in, okay? And the bank is being debited the $20,000, and we're sending all these things straight into our regular income and expense accounts. I'm gonna go ahead and click on save. Okay, then to allocate payroll from an outside service company, what I like to do, especially if there are timesheets involved, is I set up all the employees as vendors. That's how I like to do it. There's many ways to do it. Some people do this weird thing with journal entries. I guarantee you there's no better way than this. This is the actual best way to do it, right? So you enter your outside payroll expenses like normal, put them straight into the P&L, okay? When I look at my P&L, that looks normal, like a regular cash basis P&L. But then I put every one of my employees as vendors, right? Because we're making the assumption that we're not using the built-in payroll system. So I'm gonna put each of my employees as vendors. So let's say, for example, I'm gonna put employee number 1 here as a vendor, and we'll do Hector Garcia. And I'll put a vendor in parentheses, we'll put employee in parentheses so we know that they're an employee, although I'm putting them as a vendor. And I'm gonna track his time like normal, right? So let's say he spent 4 hours here, 6 hours here, 7 hours here, 3 hours here, 4 hours here, right? Like a regular timesheet. Like I'll usually create another one called admin. So I create an actual customer called admin, and I put whatever non-billable time that we have, right? Whatever our non-job costable time, I'm gonna go ahead and put it there because I know I'm not putting that in any sort of job cost. Okay, so I create a customer called admin just so I know what's going on. And then under service item, I'm gonna use my labor item because that was the same labor item that we're using all along. Okay, so let's say this is one of my employees that worked on this job. Let me create another one. Okay, and then we have Carlos Garcia, my brother. I'll put here employee, and he's a vendor as well, and he worked on, let's say, one job and admin. So let's say he worked 8 hours on this job, 8 hours on this job, and the rest of the time was all admin. Okay. And under item name, I'm going to make sure I have to uncheck that billable box. It always gets on the way. I'm going to put labor here and then labor here. Okay. So I'm going to go ahead and click on save and close. And then what I'm going to do is I'm actually going to create bills to allocate that time to the jobs in a bill. So I'm going to go to vendor, enter bill, and I could use a check as well. It could be either one. I pick Hector. Okay, I'm going to hit yes. Bring all that time information for the month. Hit OK. At that point, I will need to know what is my burden rate for this employee. Like I need to know how much this employee costs me. So I typically take their cost, their payroll, their benefits, their workers' comp. I take all that stuff and create one lump sum number based on hours. So let's say my cost of Hector is $28.86. Right? So I'm going to copy that number all the way down. Check this. So copy this number all the way down. Okay. That way my burden rate is being job costed. Some of it is being sent, to admin because I have no job or something like that associated with it. And then I have a dollar value that is not a real number. Okay. This is my estimated cost of my employee based on the burden rate times the timesheet hours. So I take that number and I come back to expenses. I go to wages. So the same wages line that I use to expense the actual dollar amount that came out of the bank from ADP. And then I just come in and I plug in the number manually. 1154.40. That way the bill turns out to be zero. Now you can do a check as well if you prefer. I like doing bills, but you can use a check as well. And we can call this one weekly job allocation, whatever it is, right? So what we're doing is, again, the premise is we don't run payroll internally. We run payroll externally. We have a timesheet. We know how many hours you spend on each job. We know how much the burden rate is. And all we're going to do is create a bill and zero it out so we can job cost or transfer from our payroll general ledger expense account into our direct expense job cost account. So I'm going to click on save and close and click on save. Now I'm going to go ahead and expand my profit and loss report. I'm going to split this up into customer job. And then now finally, you'll be able to kind of appreciate what's going on in the books here. Okay. So let's see what we got here. Okay. So look at all we're going to have here our regular P&L. So you have to look at all these components. I'm going to hit collapse. That way it's a little bit easier to read. So when we look at admin, notice that we send part of our direct costs, because our employees are direct costs, into admin. That was all the hours that they work, that they don't have a job cost associated with it. What this number tells me is how much of my direct cost employees are not working on jobs, right? So that number, I use it just for me to track and understand how much of my time is not quote unquote productive. The second thing you're going to see here is you're going to see each of the projects and its profitability, and you're going to see it broken down subcontractor and direct cost. If I actually split up direct cost, notice that I have a line item called allocated payroll. Okay, and the allocated payroll is being sent to each job based on that $0 bill that I created. So now that's how I bring in my payroll from a third-party processor into here. Okay, and let's see what we have. Let's see for a second here. And there was let me see something, because I don't see my regular payroll expenses. Give me 1 second. I don't think I saved it. Okay, so I didn't save it. So let me click save and close, because I was expecting to see that. Okay. So when I look at my regular profit and loss report, I see my expenses and my insurance. I see all that stuff logged in here correctly. But in here, notice that in here, this dollar amount is going to be netted. So I'm going to double click on this dollar amount, and notice that this has a net, right? It's got the 15,000 that of the money that actually came out of the bank, and we have the money that we had allocated. What some of my customers like to avoid this is what they do is when I do this allocation here, I'll create a separate account called allocated direct costs. And the effect that does is when I see a collapsed payroll expense account, I don't see really the difference between what was allocated and not allocated. But then when I look at my profit and loss report, I can see, okay, this is my actual wages based on a W-2, and this is my allocated wages that I'm removing from my expense account so I can put them into my direct cost category. Because remember, what we're doing is we're estimating our burden cost, and not all our employees are being job costed, and we're sending it here to the allocated payroll job cost. And the reason for that is because when I expand this by customer and jobs, is because we're going to have, let me expand that and then make this a little bit tighter. The reason for that is because we're going to have the 1,154 sent to our direct costs, and some of it is going to go to job A, some of it goes to job B, some of it goes to admin, etc., etc. So that was how, this is my technique, right? People have different techniques. People do journal entries and all sorts of crazy things. I think that's the absolute best and fastest way of doing it. Now, one of the questions I get is, is this bill showing paid? No. When I go into pay bills, okay, the bill doesn't show up here anywhere. This is the bill for my employee because it got zeroed out. Because remember, in QuickBooks, when you zero out the bills, they basically show up as paid. Okay. Now you can use a check if you want to, a $0 check. It works the exact same way. It's really up to you what you like better, $0 check or $0 bills. Okay. Let me open up the PowerPoint real quick. See if inadvertently I missed anything from what I promised to show. Let me see what we got here. So we got progress invoicing, job costing, timesheets. That's it. We actually did everything. Beautiful things. Love it. So on the last slide, a couple of things to look after. One is where it says this link that says manual payroll. It's a very popular video that I have. It actually explains how to override QuickBooks and make it think that payroll is turned on so you can process payroll internally for the purpose of job costing. So if you want to skip the whole enter a bill and zero out process, you can do it through the payroll system. I think it's a much messier setup and a much longer setup. I think that my technique is super quick and super easy. So I would recommend that one, actually. The second video, job costing with QuickBooks Premier and Enterprise, touches on some of the concepts that we talked here. I may cover a little bit more, a little bit less in certain cases. On the third video is sales orders and purchase orders. I explained how I use sales orders for construction to create work orders and how to do purchase orders. This is still going to be covered in part 2, by the way. So if you just come to part 2, every single thing that's here will be covered in part 2, but you can't wait. This stuff is going to be included. And the last video is how to job cost for inventory materials, which is another really common question that I have.